Hello, my name is Todd Mercer, and I'm one of the managing partners and founders of Mercer Wealth Management. We wanted to put out a short video today on what's been going on with the markets. We wanted to frame it in three parts. One, what we think the administration's plan was, although we didn't agree with it. Two, what actually happened. And three, where we think we're going next. First, the administration did these crazy draconian tariff policies to shock the stock market and get it to go down. They had already said that there was going to be some short-term pain in the markets, and they definitely accomplished that. They wanted to do this for several reasons. First, they wanted to push the Treasury market down, particularly the 10-year Treasury. Next, they wanted to shock the Fed into thinking we were going to have a recession and get them to lower rates before they were ready to. Next, they wanted to lower oil prices, which helps the consumer, obviously. They also wanted to get some trade negotiations done with some European partners and others to get them to lower their trade barriers and tariffs. Finally, they wanted to hurt the Chinese economy. That is not what happened. In a vacuum, a lot of these things would have happened that way, but that's not how the markets operate. What actually happened was, after sending the stock market into a spiral and hurting all of our friendly trading partners and hurting the U.S. reliability as a trading partner, after initially falling, the 10-year spiked. It initially went from 3.8 back today. We're sitting at 4.4, 4.5. The 2-year initially fell, indicating the Fed would cut rates, and it spiked back up to the upside. The Fed has come out and said that they're not going to lower rates. They're going to stick to their dual mandate of managing inflation and keeping steady employment. Oil prices initially fell. However, that's not a good thing because now OPEC has increased production to pick up market share, and domestic producers may not drill and do exploration because they're worried about oil prices falling and not making profits. China has called us a bully and has buckled up and increased tariffs to 125% on our imports to China. Our other trading partners have lost faith in us. And what actually happened is a lot of sovereign debt funds are now selling Treasury in the dollar. This has put us in a very serious and perilous position. So what we think is going to happen, or what did happen, was the administration on Wednesday backed off, obviously, of the trades and put a 90-day pause. Yesterday, at the president's cabinet meeting, he said he may do additional pauses. Now we have the Treasury Secretary and others negotiating trade deals in Washington, and hopefully we're going to get some good news out of that during this pause time. However, we have escalated it with China, and essentially we don't have tariffs with China. We have a trade embargo between the two of us. That's putting a lot of domestic companies that import from China in some very perilous positions with their products and their sales. So that's essentially frozen the markets right now for a temporary basis. Consumer confidence is falling. There's been some negative reports of that. Businesses have essentially put everything on pause. This will be deflationary, and it will hurt GDP. So what we're hoping is that the administration will negotiate some of these trade treaties very quickly and get through this. We think Trump will blink with China because it's too big a deal. He'll try to take a victory lap of some sort with it, but he will blink, and we'll get something done with China because we can't lose one of our biggest trading partners that way. We think within a few months, a lot of this stuff will work out. In the end, we think that will shave several points off of GDP this year. It will allow the Fed maybe to cut rates a few more times. The markets will recover. The longer it drags out with uncertainty, the more damage is going to be done. But we do think that we're going to get through this, and we do think that the markets will recover by the end of the year. Thanks for your time, and thank you for your business.